Welcome back to the Daily Journal. So I just finished recording the 6 a.m. continuation from yesterday's price action when I saw a clean setup for the 6 a.m. from today's price action. So I thought I might as well just record it since I'm here. So it's the new week opening gap that gave me the bias for this trade. And seeing this candle close, the 2 a.m. candle close like it did, back inside this range, I was looking for a 50-minute change in state of delivery. But before we get down to the structure part, also just dividing this into quarters, you can see it's respected the 0.25. In fact, when we go down to the 15 minutes, you can see that it's really clean. So I'm just going to remove some of this. Okay, so initially I was like, okay, great, so I want to change the state of delivery here, which is what I'm looking for going into the New York session. But since prices come up and making these really super highs, yeah, we'll have to see how that plays out. It'll be better just to see continuation, and yeah, we'll take it as it comes for the New York session. But for the time being, you can see we respected the 0.25. And so just to go back in time and clean this up a bit. I'd got to, over here. So I would have loved to have traded this. I missed it. So I just didn't have an alert on for the new week opening gap here. Because when we drop down to the 1 minute, look at that. Man, this is what I live for. 1 minute market maker model out of this new week opening gap. And if you look here, look at that swing low forms on the 15 minutes. So had I been around and not recording, with the daylight saving, it's a little confusing. I'm an hour behind basically now. So yeah, this is 5 a.m. Typically, I'd expect this happen at the 6 a.m. or at least around about the same time as usual, but it's an hour difference. So getting back to the swing of things, but here's the thing, is that by the time we got to where I executed the trade, we hadn't yet taken out the drawn liquidity, which I'll get to in a moment. So you can see there's the change in the delivery. This is confirming to me that this is the accumulation side of a market maker bar model that is delivering to and from this new week opening gap. But from where? The new week opening gap and to these equal highs. So you can see we got plenty equal highs here. These as well. And all these swing failures and all these gaps. Now with that change in state of delivery, that's just telling me this is a market maker model. And you can see how it lines up with the 3.5 to 4 standard deviation. So we'll just clean this up a bit. So there's your smart money reversal, confirming to me that there's distribution. Distribution has begun, right? The market makers have accumulated long positions. They're now going to distribute until such time that they reach these high time frame objectives. So when I got to the charts for the 6 a.m., I'd obviously seen that price action, but it's not a problem. The reason being is because the bias is still valid until such time that the drawn liquidity has been taken out. And in fact, it's just higher probability. As RCT once said, your entry is the least important part when you know where price is going. Of course, the second most important is your validation, right? So I know that right now this low is protected. Now I need to trade the continuation. So with the formation of this 50-minute fair value gap and going into the 6 a.m., I'm looking for price to do exactly that, create a swing low, because then I can expect price to continue higher. So dropping down to the 1 minute, right, that's the 6 a.m. over here. And it's just, okay, great. So we've got a high time frame candles here. So the second thing I looked for, we're inside of this 50-minute fair value gap. I'm now looking for SMT. You can see how ES hasn't taken out this low, whereas NQ has. So there's SMT. And we can just refine this 50-minute order block, fair value gap to this balanced price range. Okay. So at that point, I'm looking for a change in state delivery, because what am I looking at now? I'm looking at another market maker model. So that is the larger, or yeah, it's still a 1 minute market maker model. Maybe you can call it a 5 minute, 3 minute, whatever it is. It's the overall objective. This is my main bias. This is just extra confirmation that I want to see. And so with the change in state of delivery, I then saw, I would have liked to have got in here. I think I only go to the charts and finish my analysis by the points that happened here. So the fact that we closed above, this is a change in state of delivery, right? There's your smart money reversal. I'm not looking to trade the smart money continuation, because look at this. So the fact that we've got this volume imbalance and this balance, this inversion over here, that's exactly where I'd put, looking for an entry on the inversion, trading up to these really cool highs. I don't need it to go all the way up, because look at that risk to reward. You don't need to be perfect in trading, you just need to be right, and you don't even need to be right that often if you have the correct risk to reward. So you can see how we're about to start a new candle. Oh, we just have, sorry. And there it is. So that's where I got my entry. And price then continued to consolidate 4 bits, which is just the first stage one. This is a stage one distribution, right? We've had our smart money reversal, and this is what we're looking for now, is continuation. So when we closed above this over here, that's continuation, because you've traded, price has traded back into this fair value gap, then traded above. So you can even, what I often do is rather just use that. And now that is confirming continuation. So my stop loss immediately went to this low, because that is now a protected low. This initially was it. Then I made my stop loss directly to that. So what I was looking for at this point was expansion. I don't want to see price sweep this and then drop lower. And I don't expect it to. The reason being is because look at what I'm trading. I'm trading the second stage distribution of a larger market maker model here. So you can see there's a market maker model within this market maker model. That's why I'm exceptionally bullish. And I'm looking for this expansion, because it's always the most explosive part of a market maker model, is the final leg. So you can see as we closed above that, it consolidated for a bit. As we're about to open up a new 50-minute candle over here. And that's exactly what I want. I wanted to see that close, but then second to that, what I wanted to see was continuation here. So the moment we close above this, I know that that low is going to be protected until such time that the high time frame objective is hit. And look at that. That's exactly what I was talking about, what I was expecting. And that's what you'll often see with these market maker models. And so there it is. That's the target. And I'm not too sure how price has played out since. And this is precisely why you just go for the low-hanging fruit. So there's the market maker model not those highs over there, even though the standard deviation is there, and that's fine. I mean, this is just a 15 minutes favoritic gap that is traded into, and here's another market maker model. Right, so you'll probably find that the SMT, there's SMT here. Well, there we go. Look at that. So you see how these highs had not been taken out? Look at SMT with the correlated pair. And that's what you got to watch out for. So this was just another market maker model. If I wanted to trade again, which I won't, one and done. I could have jumped in here and traded up to this. Had I not taken, taken this correlated pair into consideration, I would probably have got stopped out at break even or something like that. So you've always got to watch for the correlated pair. So yeah, that is the 6 a.m. continuation. And sorry, I don't know what's going on here. What I wanted to show you here was the just the 15-minute candle here. You see that swing low that was formed and the continuation to these root highs, and that's why you always go for that low-hanging fruit. Awesome, guys. I'll see you in the next one. Cheers.